Hello, everyone. My name is Michelle Wright, and I am the Manager of Patient Programs here at Lung Cancer Canada. Thank you for joining us today for part one of the Lung Cancer Financial Navigation Series, Tax, Benefits, and Support for Patients, Care Partners, and Professionals. This webinar is presented in partnership with Mobility Financial and Unmasking the Reality of Lung Cancer. Please feel free to comment using the chat box, but if you have a question, please enter it in the Q&A function, which you will find at the bottom of your screen. Questions will be answered at the end of the session, time permitting. If you feel you've missed anything or would like to recommend this presentation to others, it will be recorded and uploaded to the Lung Cancer Canada website. Navigating lung cancer is difficult, and dealing with costs adds another stressful layer. The cancer journey is not just about appointments, treatments, daily living, and accessing all the programs available and finding ways to stretch an already stretched budget. Our speaker today is Diane Colton. With over 23 years of professional experience, Diane is the owner of Mobility Financial and a lung cancer survivor. She advocates on behalf of lung cancer patients and researchers. She's a patient consultant to Lung Cancer Canada and the Lung Health Foundation, and supports the initiatives of many Canadian nonprofits through her charitable organization, Unmasking the Reality of Lung Cancer. She was also awarded the King Charles III Coronation Medal in 2025. Welcome, Diane.
Hi, thank you. First off, I would like to thank Lung Cancer Canada for partnering with us on this initiative, discussing all fun things in life that are taxes. I'd like to thank everyone for attending this. I think this topic is important. As a lung cancer survivor, I understand the costs that go into treatment, being a patient, life, and things like that. I also have the background of taxes and how CRA views things and what you can and can't do. So many Canadians are missing out on tax benefits and tax credits for what they are doing. So just a little bit of background about CRA, just as a starter. CRA has the right to challenge anything you do on your tax return. You, on the other hand, have the right to claim all legitimate expenses to ensure that your taxes and the taxes you paid are the lowest amount that are legally required. So today's session is pretty well just a gloss over, I guess I'm going to say, because the medical expense portfolio with CRA is literally thousands of pages long, and there's three different segments. So there's the medical expenses themselves, there's the disability tax credit, which is going to be the next session coming up in September, and there's also the home expenses that can claim. So we're going to be, again, covering just some of the areas about this, and hopefully you will get a lot from it. Please put your questions in for the end. I will say, if it's more complex, we probably will not be able to cover that with you, and it may be something that you should do with your own professional tax preparer, as I believe everyone should have that to ensure that you are getting all the tax credits available to you. Bear with me. I'm trying to navigate without my glasses because I can't see the screen without them. With them, I mean, and I can't see the little stuff without them. So this should be a lot of fun for all of us. Here we go. Maybe. There we are. So when it comes to taxes and expenses to claim, especially as a lung cancer patient caregiver, there are so many hidden expenses that you don't know that you can or cannot claim. And so we're going to cover some of these. So what is the medical expense tax credits? What can you claim? What can you do out of country? What are the differences between being a single and a couple strategies? Caregiver support options, because these are all part and parcel of it. And a lot of what you do and what you will do going forward can either be shared with somebody else, or how do you strategize for yourself to make sure this works? Okay, so again, it brings unexpected bills. On average, Canadians with lung cancer, excluding treatments, are spending anywhere between 5 and 30,000 a year for personal expenses to cover what they have to do when it comes to travel, hotels, meals, what you have for supplies, what your home is like. So getting and being sure that you can have these tax credits and knowing what they are is definitely imperative. So other costs in there besides these unexpected bills are things like parking, your travel. Can you not claim the travel? How does that work? Medications that are not prescription. So things like, N NR95 masks, which are a big deal for all of us now due to all the fires, the pollution, those types of things are they deductible? Are they not? Other things that you have to get for, people who are dealing with incontinence, can you claim products like the adult diapers and things like that or not? So just know that you are definitely not alone with this because this is something we all have to deal with on depending on how our cancer is. And let's have a look a little bit more on what's going on. Hey, there are specific tax breaks in Canada for medical expenses. So again, the first is the actual medical expense tax credit, which we'll be going through in a minute. Again, the disability tax credit and then the homeowners tax credit. So what they're designed for is to help you offset your costs due to your medical condition or other elements that are involved with your treatments, and you get to claim them on your taxes every year. So you have, of course, always your basics, and just know that there's close to 300 different expenses you can claim. That is on CRA's site. And because this is just such an overview of everything, I would really suggest you speak with your tax professional about this so that they can cover and ensure that everything is there for you. Easy to look up on CRA's site, or just Google asking what the actual expenses are that you can claim. There are the expenses that you can probably challenge. And again, these are individual. So looking at how they work and whether you can or cannot, it is again something to deal with the professionals. So again, let's start with the medical expense tax credit. So this is where you put in, or your tax person, or again yourself if you're doing your own taxes, all the different expenses that it costs you for daily living. So regular ones are your prescriptions, eyeglasses, eyewear, physio, chiro. A lot of these expenses are also driven by the provinces. So know that the provinces are different and not all provinces allow you to claim the same expenses. So that is something to look at. And as an example, in Alberta, we can't claim massage, but they can in BC. So we don't get to have all that relaxing great time where everyone in BC gets to be laid back and relaxed in what they do. So, and that's just a light overview of that. So, how it works, there's a threshold based on income, and you put in your expenses, you go to um, that threshold, which if you're at the 90,000 income, it sits at 2,834. So you put in all the expenses you're claiming, and it's only what's above that is a tax deduction, and it is a tax credit. You have things like travel. Most people don't claim their travel. And that is a big part, and we will be going a little bit more through that later on. So if you have the disability tax credit, that changes the landscape of this as well. If you have a very low income and are still working, some of your medical expenses can be refundable. And again, it is specific to that income. So that's, some of the things you want to look at for that. So core things you can claim are with an authorized practitioner. So again, chiropractic, physio, all of that. when it comes to the expenses themselves and on the tax return, if you have a partner, then either one of you can claim. Usually it's the lower income person because of the threshold, but you can also divide the expenses between the two of you. So it's not just one person and that's it. It's how it lays out the taxes and the returns at the end of the day. So again, the list is very extensive for this. We can, and I can actually pull out and have a list available to anyone who wants, and that you'll do through Michelle and to see what there is. So that's just the outset of that. And so, what is a non-refundable tax credit? So the big thing about that is it actually lowers the amount of taxes you're owing. It doesn't lower your income. So once all your tax credits are added up, it gives a percentage, which is 15% of the total amount. But that amount also includes not only the medical, but your personal amount, some of the other disability tax credit. There's a number of them. There's probably about 40 or 50 of those, and they will take your income and drop down the amount of actual taxes itself. So it is sometimes a better deduction for you than would be just lowering your income. So it reduces your total tax bill, of course, because of the way that works. Yeah, but part of this deal is that you have to keep track of everything. Um, and again, we've already covered the baseline of this, and sometimes I get ahead of myself, but that's okay. So I'm actually going to go past this one because it's done. And I am sitting here about talking. Sorry, I am just trying to read here, and that is my apologies on that one. So claiming as a single person against a couples is quite different. Whose tax return does it go on if it's a couple? As a single, you don't really get a lot of deductions. You just get your basic medical, anything like that. But when it's a couples, there's a lot of cross transferring that you can do on credits and people that take things up. As a single, you can also have somebody who is a caregiver for you claim taxes, but again, it has rules to it. Low income means refundable tax credits, and this is about lowering your tax burden. Okay, so one of the things that most people don't cover is traveling. Um, it must be minimum over 40 kilometers one way to go to your appointments. So your appointments will include oncologist appointments, any medical appointments that you have, whether it's dentist, chiropractor, physio, your oncology appointments. Those are all claimable. You can claim a caregiver as long as that caregiver is there because you don't have the ability to do this yourself. If you're driving yourself or you're taking there yourself, then no. But if they are having to take care of you and help you through the process, driving, parking, and all of that, then they can. So, you know, length of day is part of it. So can you claim meals? How many meals can you claim? How far have you gone? If you're staying overnight, these are all part of it. So basically, of course, gas, your parking, transit fares are definitely claimable when the trip is longer or more extensive, your hotel, your meals can be claimed. Flights, if you're traveling, a longer distance, which so many people are doing now with that. And you have to keep a tight log of all of this. And this goes with everything when it comes to medical expenses, when it comes to treatments, everything that you're claiming, you need to keep a very detailed accounting of what's going on. Again, CRA will come back, and especially when medical expenses are high, they will request validation and proof that all these expenses occurred. So going back to CRA and they're challenging, this is part of it. And especially with the travel at the moment, because you can literally claim every single trip that you do in a year. Personally, I've had some clients that have had 20 trips in a year, and the refund, the deduction is substantial with that. So CRA is going to go after this. So you need to log in and keep all your receipts. You can put them electronically and make them digital, but you need to have had the original receipts. Credit card statements, bank statements will not work. CRA will not accept those, and you will be challenged and you will lose on that one. So all receipts must be kept. Definitely a log of all your appointments, what you went there for, who you went to see. You need the address, the dates and times that you went there. Your parking tickets if you drove. If you did transit, then you need to keep that transit tag with that. Okay, then we have, which is again with the travel, there's the 40-kilometer one, which is the base one, and then anything over 80 kilometers each way. That is definitely much more extensive, and this is where things like meals, your overstay come into play. And again, where it says here, just the caregiver, that does apply to the 40, and as long as you do not have the capacity to do the traveling yourself. Okay, so we have things like what other things that you can claim. So in many cases, we have all these other items that we're purchasing for ourselves, whether it's a walker for getting where we need, different apparatus that we need at home for doing that. Wigs if you have hair loss, because of your chemotherapy. Again, we're back down to receipts. And in a lot of cases, you need to have this noted with your doctor, that this has happened. Your private healthcare premiums. So many people do not claim their healthcare premiums, and it's yeah, it's a big number, and it usually is a big number. Now, as a side note, with some of this, you have your regular healthcare premiums, but in a lot of cases, if you're still working or your partner's still working, they have health spending accounts. Now, some of your costs can be covered by the health spending account, and it wouldn't go onto your tax return. But it's also more things. So if there's areas where your province doesn't allow you to claim items, a lot of times your health spending account will. Depending on the type you have, will depend on what is covered. So in some accounts, you get to claim gym or any type of fitness events for that. Things like golf memberships, which you wouldn't be able to claim on a regular return. So knowing what you have, what you can do, is really a priority for you. So speaking with your tax preparer is again a big priority, because it is our job to be able to look everything up and find everything for you. Understand that in the case of everything that we do and with taxes, there's a lot of information and there's a lot of intake on our part to be able to determine and to ensure everything is done. Taxes change every year. What they allow changes every year. What they don't allow changes every year. So for these items that are not prescription, like, again, and so like wigs, band-aids, things like that, they are all claimable, but it has to be relevant to what your illness is at the moment. Okay, so how do you track? Yeah, it's the old shoebox thing. Not recommended, but when you're traveling a lot and you need to sort, yes, keep it all in one container. I would also recommend that you break it into categories. Those accordion folders are probably one of the easiest and the best ways for you to keep track of everything. Do it by month, and know that you have all of those in there. Again, I'm going to recommend you digitalize everything, because if a receipt is faded and can't be read, CRA will not allow it. Even if you had, say, a credit card statement matching that this is what you did, it will be tossed by then. I would keep a diary of all your appointments, and I'm sure most of you do anyways, because your life is just a little chaotic, right? Well, a lot chaotic, but keeping everything in order, what you need to do, who you need to see, all of that. Any letters from your specialist or your doctor need to be kept. Um, I am actually, I'm seeing a note here. I am going to be covering overseas travel and out of country travel in a couple of minutes here, so not to worry. Um, so you make sure you have everything. You digitalize it. You date things. If you're claiming a meal, you're gonna have, you write on the receipt for the meal what it is, where you went, and who you were with. You need to keep both sides of the receipt for the meal. So that's the debit portion as well as the detailed portion. CRA is going to want to look at that. And again, if it's not up to their level, they will toss it in and not allow it. Yeah, and I know this sounds extensive, but it is definitely worth it for claiming. Okay, so we're going to cover a little bit before I go into the other travel portion of things. And caregiver support system. Again, this is an area that's forgotten so often, but the rules are really, really strict on this, and who gets to claim it. So your spouse can claim it for you if you have a spouse. You can claim for your parents, you can claim for your children, again, your spouse, you can claim for your grandparents, as long as it's nuclear family, the caregiver amount can be claimed by the person who is doing the caregiving. There is a threshold of income for that, and it will vary. So the amount that is claimable, say just for an adult dependent over the age of 18, is 8,773. That is the total amount for the tax credit. That is not the tax savings that's there, but you can only have a person that you're doing the caregiving for have a maximum income of 29,374. At that stage, the credit is not available for anyone. So same thing for a spouse or common law partner. The threshold is there. So the income starting point is 20,000. The end up threshold is almost 30,000. There is for children as well. Again, so in this instance, and one of the things to keep in mind and consider is having the disability tax credit. You will need it for quite a few of these areas, especially when it comes to the caregiver amount. So it's something, if you haven't applied for it, or if your doctor has said you don't qualify for it, in the next session in September, we'll be talking about that. I have the disability tax credit, and I continue to work approximately 60 hours a week, and I I live a little differently than most people do, but I get to have that tax credit. So it is not based on whether you can't move, can't walk, can't do anything. It is a rather complex criteria as well. Hey, so again, back to the caregiver. This helps them lower their tax amount. And it also helps when it comes to things, especially for partners and couples, where it lowers your base income depending on who you are and which way you do it. Um, whether you get extra benefits, especially if you're over 65, do you get any of the income supports? Because this all changes and navigates down what you owe in taxes and the base amount that the governments will look at for you to get other services. So again, you have the list there. So it's spouses, common law partners, children, and I don't need to read that. To you, because again, it is nuclear family that it works from. And I'm probably gonna in change here a little bit, because I know people want to talk about out of country. So yes, you can claim out of country. So one of the things that you can look at, and sorry, I'm just pulling up my notes. So first off, you have to look in Canada. So you can't just go to the States if it's available in Canada. You do have to go to Canada first. It's if it's in your province, that's your first line. I know in a lot of cases people are looking at 2 years plus, or the treatment's not available. So if the treatment's available in Canada, Canada is your go-to. They will not recover or pay for your expenses. Know that a lot of times, and almost always, this is a provincial coverage. So whether you get covered or not is in there. If you're not planning on being covered, then yes, it is deductible. But again, they will go on the criteria that you should have gone to Canada first if the same treatment is available. If it's not available, then yes, out of country travel, but it does have some criteria with it. It has to be a qualified person who is doing the treatment. So, and it can't just be any treatment, it has to be recognized treatment. So in many times and in a lot of other places, they have alternative treatments. So none of those will be allowed. You have to apply ahead of time for all of these, and you need to qualify and quantify that you cannot get the treatment in Canada, that it is a viable treatment for you, that it is being done by a person who it is qualified. So that would be an oncologist, a doctor, things like herbal treatments and that type of thing are definitely on the no list for that. The costs have to be um, within reason. There could be some points where they will not cover all of it. And I do guarantee you that this will be challenged by CRA, absolutely. And you need to have complete details on that. So I just kind of slipped that one in there because I know it was a big topic for people. But let's talk a little bit about, credits going back and forth. In some cases, the the person who either has the illness or family member is not working. In a lot of cases, a lot of the credits can pass back and forth. All medical expenses, again, and I did state that earlier, can be passed to each other. Um, if you have the disability tax credit, it can be given to the spouse or the caregiver person. They do not necessarily have to live with you, but in order for these credits to be utilized and passed over, they do have to be taking care of you and covering a lot of your costs. So as a caregiver, they are doing more than just coming to visit you. They are helping you survive and live. So again, singles can transfer. That is one of the few things that they get to have. But in everything that's done, um, it needs to be checked. It needs to be verified because it may or may not qualify with them, and going in and doing this and then having CRA back it out just means it costs you money. So once CRA has decided that they're not going to allow a deduction, then you have the right to challenge it. You have the right to go back and forth with them. Ultimately, that costs time, that costs money. The other thing is if they deny it, then not only do you lose that tax benefit for that amount, but they're also going to go back and charge you penalties and interest for changing, and because they're changing the tax return. So everything, but everything in this, as great as it is and all of that is you need to be sure of everything you're doing. Be careful when you go into Google, because Google tends to half truth you on things and tell you you can do things that you can't. So again, I would recommend always talking to your tax professional about that, or you call CRA and they will be able to answer those for you. What they will normally do is send you to a link for you to look it up yourself. Their job is not to do your work for you or to answer extensively those questions, they will direct you, and that is pretty well everywhere they will go with you. Okay, so you have these tax credits happening, and it's lowered your taxable income, it's giving you these benefits. Now that's where you want to look up what's going on with the provinces. We're not covering a lot with provinces today because again, it is a whole other several thousand page documents, but you need to check with your local government, so the provincial government, your local health care system, also the different organizations that are offering services for people, because that is another way, due to the changes in your income and everything that you have going with you, that you can have other services covered for you, whether it's housekeeping, meals. If you don't have the ability to drive yourself, and you are a single person who is dependent on themselves to get everywhere, these are the areas you want to look at. So you have a double layer happening for you. You have the tax credits that are becoming available through ensuring that you're keeping track of everything. Um, and then you go to the provincial levels and to the local organizations, and it will help give you services that we all need and we should all have. Income in some cases makes a difference, but not always. So just because you may have a higher income due to investments and things like that, it doesn't mean you can't have them. And again, case in point is disability tax credit. Income is not relative to that whatsoever. It was designed to give a tax benefit because people with, and I tend to use not disability tax credit, but diminished capacity. So having diminished capacity means you can't do the same thing that somebody of equal age and equal standing can do. So it is to help pay off and cover some of the costs for that. So I've got a little bit off here with the slides because that's my way of doing things. So I'm just going to cover a few other things within this realm that we're talking about. So keeping your receipts, knowing that you can't use credit card statements or bank statements is important. Make sure it's deductible. Couples don't file together, and I have that constantly happen. And so you're missing the opportunity for tax credits. Um, y- and not keeping everything and not knowing that you can. So when it comes to things like prescriptions, so for prescriptions, the pharmacies will normally give you a summary page at the end of the year, which helps us on this side, but you still need to keep the little prescription tab, and you also need to keep the receipt for it. So it's not just, how do you know? Okay, so I'm kind of reading a question here, so I'm doing this. How do you know if you qualify for a caregiver? There is a whole section on that in what a caregiver is. And give me 2 seconds, and I will actually pull something up for you. Like I said, this is thousands of pages long, so we don't tend to know everything off the um top of our head. So this would be again a family member. They are taking care of you, so it's more than just visiting you. It is financial care. It is running you to all your appointments. So it's acting like a paid caregiver would, um, except you're a family member. There is a tax credit now for paid caregivers in Canada, but that's not what this type of credit is. So it's, how much you're supporting them, how much are supporting the background and the underlying costs. Again, costs, we have, oh my God, so many things. So, do they live with you? Do they live far away? So somebody who lives, say, in Ottawa, but you live in Toronto, they wouldn't qualify just because of the distance, and they're not acting as caregiver. Sending a check does not qualify you, so you need to check all the details. I will get at after this, I will get some information to Michelle that we can share out. So just some easy links for you to find things for this, because again, we can get down a rabbit hole and then we're talking about way too much. I do want to cover a little bit about the home renovation credits that are available, because they are a substantial one and many pieces people are not taking advantage of that because they don't think, because they are not as ill, or they're not having to redo their whole house. But if you have to get things like bars for the shower, bars for the bathtub, any changes that will make your life easier, that does count. Do you need to put in a ramp? Things that don't count is building a room, doing basic renovations, putting carpet in, putting hardwood in. So it's about increasing the safety. It's about increasing the ease at which the person who is dealing with the illness can navigate and function in their own home. So repairs, things like that, you can't do now. You have a choice, because it used to be, again, um, two areas that you could claim it, but you're only allowed to claim it in one area now. So you either do the home accessibility tax credit, or you do it as a medical expense. Um, Depending on where you are and where you are with things, I would probably go with the medical expense tax credit is a better credit for you. Other things to consider, especially for people when you need to, yes, we can do that for you and send you a link. It will be a couple days out to get that all to you. And now that I understand and know what people want to see and what they want, then absolutely. Um, so sorry, now I just lost my train of thought, and I tend to be not quite so tight in how I speak about things. But at the end of the day, this is about people getting the most tax benefits they can, ensuring that they are getting the most benefits that they can, and getting yourself ready for this. I mean, if your expenses are next to nothing, then great. But most people, and most of us who are dealing with an illness, have a tremendous amount of expenses. If you're paying out of pocket for treatments, those costs are tax deductible. So make a list of everything that you're doing, and this is, as as part of your planning for what you're doing. And planning now is really important. Don't wait for the last minute, because you'll be scrambling around to get everything. So know what you're doing, know what you're paying for, write down all your basic costs. What do your treatments look like? What do your appointments look like? And start tracking everything. And again, so the biggest thing is sit with a tax specialist. That's what our job is, and that's where we can help you on a one-to-one basis. Have a meeting with your family. This is can be a lot of work for most people to do, and to get it together. So, making it a family affair, and also so that people understand where you are and what's happening in your life. You're not necessarily living with your family. Again, you could be a single person, and the family is living from a distance, but to have this all in place, um, get everything saved, get everything scanned, um, list it all, check, and start, looking at all the different sources that you have available to you, um, for saving not only you money, but time and the ability to function at a higher level. It's difficult, and I do understand that. I am still currently living with my lung cancer, so I get all of that. But knowing all of this, and again, this is such a big topic, that is there, and I could only just cover a very small amount. And as I'm working here and talking, I'm thinking of all these other things that I really would love to be able to speak to you about, but at the time just isn't there for us to do that. I mean, how you transfer, what credits you can go through, what this all looks like, what this navigates like, what happens, with partners. Yes, you actually, for that question from Yuan, yes, absolutely, you can. So actually multiple family members can have the disability tax credit. Some of my clients, there's 4 people in the family that live in the same house, and they all have the disability tax credit. So that's part of why you want to work and do your taxes together, and ensuring that everyone is covered, and that all the tax credits are transferable. It takes, again, some work to do this, but it is definitely well worth it. If you get, and again, when we talk about the disability tax credit, which is definitely an easier topic because it is one area only, your tax credit is approximately $3,000. And it can go to one or the other, or depending on who the caregiver is. So it's, again, like our cancer, it's based on individual needs and requirements and what your life looks like. So yeah, I don't know what else to say, except I believe it is question time. This is just about getting help, who can do your taxes for free. I really don't recommend that, because they don't cover a lot of areas, and more information is missed because the free people are doing volunteer, and their tax knowledge is pretty limited. And again, back down to make sure it's deductible and claim everything that you're allowed to claim. So I think we will go into questions. I wanted to leave enough time for this. And yeah.
Thank you so much, Diane. If everyone, you can put your questions in the chat or in the Q&A box. We will get them answered for you. Well, Diane, maybe we can, while we're waiting for questions, maybe we can talk about a few of the resources that we can send out. So there's links to the CRA that we can send out for people to get more information.
Yeah, so we can send out links for about caregivers. We can send out the link about what is deductible. So there is a full list by province of what is claimable and what is not claimable. You have that. So the different medical expenses. Okay, there's so many things. How about spousal transfers? I can put something together for spousal transfers and how that looks, how the tax deductions look. So I'll massage this out a little deeper, so that some of the points, and again, there's just so much to cover, that they're a little more expansive in their explanation, because the explanations in an hour to cover so much is next to nothing. And so I will expand out on the different things, on what you can cover, how travel costs work, out of country travel. I do know that a lot of people are looking at that because of the wait times in Canada, but can you or can't you? I'm already dealing with I have a large client base, so I cover a lot of areas. And I have a client who had hip replacement done, and a year later we're still fighting, because the documents weren't presented the way they should have been.
Yes, and I can definitely put together some of the charitable organizations where you can apply for grants.
Yeah.
We do have a couple of questions. So you mentioned house cleaning. If I set up a deep cleaning to help with breathing, do I just keep a receipt? Can I claim that?
You will definitely keep your receipts for that. It should be claimable. Because it has to do with your breathing and your ability to breathe. CRA may challenge that one. Because it does have to be shown what it's for. And also recommendation for this is have your doctor write a note saying this had to be done.
I was about
At,
to
at,
say, would it
yeah.
help if you had a doctor's note saying that?
Yeah,
Yeah.
absolutely. For a lot of things that may be a little bit on the gray side of things, have a doctor do that for you. I mean, so you can claim air conditioners, but CRA caps the price on air conditioners on how much you can spend. So you can't put in like a $50,000 system and claim it as a tax deduction. They're kind of funny that way. So different things depending on what they are. So I have my filters. I know right now for radon, they're trying to get the mitigation as part of the tax credits. They're not there yet. So right now that's a no. So the biggest thing is to check that what you are planning on claiming or what you're planning on spending is allowable.
Yeah.
Because again, at the end of the day, this is a huge, huge audit with CRA. And it's not an audit, it's a pre and post assessment. And when they do it as a pre-assessment, they will send you a letter on your My account, which everyone should be set up for. That is imperative because that's where all the mail comes. CRA is stopping paper mail. And if you don't see it and you don't know that they're asking for information, you will suddenly get a tax bill from the government saying you owe X amount of dollars. So you need to be aware of that, but you also need to be ready and prepared to do that. What happens with the pre-assessments in particular is it's done when you file your tax return, which means your return has been put off to the side to be reviewed. So if you need your notice of assessment to remortgage, out of luck. The assessment's not being done until this pre-assessment has gone through. And because they're so far behind right now in everything, T1 adjustments are taking probably 1 to 2 years right now. And that is the other thing when it comes to medical expenses. Don't think it's just for this year. If you have expenses that you haven't claimed, but you should be able to, you can adjust your returns back 10 years. And it is definitely worth doing that because again, that's money in your pocket. But again, with these pre-assessments in particular, if you need to go to the bank for a loan, you can't. Your assessment's not done. So everything financially we do, and when you have programs like the programs you're talking about, is this covered? Is that covered? Your notice of assessment is a priority and a requirement for almost everything. And I know with some clients because they're in assisted living, they need the notice of assessments to see how much they have to pay. And if they don't get them in time, then their costs go up until that assessment is in the hands of the provider. So
And most
this
of
is
the drug programs work on that too. You will need
yep,
your tax assessment in order to qualify for drug coverage in your province.
yep. So know that when they do assessments, when you have electronically filed your return, the assessments on a normal timeline are usually done within a day to 2 days. If they're longer than that, they're pulling. Um, I will tell you that. I know with us, our program tells us when a client's file is being pulled. So we have a heads up on who needs to do what and what, because there are so many areas that they are checking things.
So we have another question. How should I track my daughter's caregiving hours? She drives me to appointments, driving me to treatments or appointments, cleaning, meal prep. What can be included?
Okay, so for driving, you can do an online app on your phone, which is easy to track. You just put it in. Mile IQ is one of the better ones. So housekeeping, yeah, just log it. If you can use Excel, use an Excel spreadsheet. If you need to use a notebook, then you put the day in, the time in, what exactly you did, all of that. So basically, at the end of the day, when it comes to CRA, it's he with the most paper is the one who's going to win. So golden rule for all of us. So just keep track of everything, get a calendar. Whether she uses electronic or paper, I would recommend both. Because for anyone who knows, I mean, we had a Shaw outage this month, and so we couldn't do any information. So I always suggest you do both paper and electronic in the event that something happens, because without the documentation, CRA will not allow it.
Can you just take pictures of your paper documents to send to CRA?
You have to electronically save them, and you have to save them in a format that they cannot be changed.
Okay, so
So
photographs
they
are not. So
yeah
it would need to
yeah
be scanned to PDF.
Yeah, or there are other programs available now online in various apps. So there's some really good, inexpensive accounting phone apps that you can take the picture of, and they save it to the proper formatting for CRA. So and one of the reasons, and part of the reasons that it is a requirement. So well, use gas for instance. They don't want you claiming that chocolate bar that you bought with the gas. So that's a big thing. So anything you're doing, keep non-medical purchases off anything you do. So if say you're gluten intolerant and you're purchasing for that, keep that bill separate. And I know it sounds like an extraneous thing to do, but it just saves time, and it saves the challenges. The challenges are what takes time as well. And because a lot of CRA agents, when you send in the information, disallow legitimate expenses. And this turns into a tug of war. And I know we just did that with the client. The pre-assessment person said no to everything. We took it to appeals, and appeals said yes to everything. But it was the process.
So any further questions from our audience? Oh, hold on. Yeah. Let's see. Oops. My father has had lung cancer twice and now has new nodules. We discovered high levels of radon in his home. He had to have a mitigation system installed. Is he not able to claim this at all?
No,
No, not on your taxes, but some provinces do have reimbursement. I'm not sure Ontario is one of them, though.
I don't think Ontario is. I know Manitoba does, Saskatchewan
Which one
does.
does?
I think New Brunswick as well. But just know that the Evict Radon and their team, plus people like Lung Cancer Canada, Lung Health Foundation, are working on getting this as part of a tax deduction, whether it goes into the home renovations or the regular medical tax credit. It just takes a long time for these to get done. Anyone knows the government works at their own pace, which is usually no pace, and getting legislative change is pretty difficult. But I happen to know Aaron Godarzi, and he is a man with a mission, and he will get it done. So hold on to those receipts. I'm just saying that because sometimes they will go back and set a prior year date when it becomes allowable. So again, and I'm just going to cover that a little bit more with medical expenses and claiming. You can go back 10 years. So if you need to do adjustments, I would do the adjustments to especially recapture things like private health care plans, your larger expenses that you forgot about or didn't think you could. Electronically, adjustments can be done for 3 years online. Everything else has to be done manually, and I would do them manually rather than using the CRA Fix Your Return site. Because doing them that way, you will actually send in the copies of the receipts, and it will speed up the the process.
Ron would like you to repeat the name of the expense tracker app. I think the
Uh,
one that will
so
convert.
the are you talking the mileage one?
No, I think it's
No.
where we were. I was
Yeah.
saying you take the picture
Yeah.
of your receipts.
Okay, hang on. Sorry, I have to.
We'll send out
Yeah.
this out to you, to everyone as well, Ron.
Yeah. Give me. So you have a whole bunch of them. And it all depends on what you want to do. I will see what's the best one for
Yeah.
use that way. But yeah, there are like Expense 365. Yeah, it gets a little crazy, and because everyone's coming up with apps now, but it's also about how easy it is for you yourself to run the app. Personally, I'm not a big tech person. That's why I have people in the office here who I call on a continuous and regular basis to save me from myself.
But Ron, we'll
And
send we'll send out. That'll be part of the information package that we
yeah,
sent out for sure.
yeah. So I'd like to say I know I went off topic a bit, but it wasn't that hard. I tend to be a rabbit hole person, and as I'm looking and talking, I'm seeing the areas that we really need to discuss what's going on. And I did want to thank everyone for your patience with me, and thank you for showing up for this. It's, I believe, very important. And as our company motto is, it's not just about taxes, it's about whose pocket the money goes into at the end of the day.
Yes, thank you everyone for joining, and be sure to join us again in September. September, Dan, do you have the date?
Yep, is disability. It's the 15th, I believe, and
Perfect.
it is strictly about disability tax credit. So it is a one topic.
Thank you, everyone. We'll see you in September.